Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is the man himself, the legend, the Robin Hood of Wall Street, Gregory Mannarino. Thanks for joining us, Greg.
Thanks for having me here. I really appreciate it. And I'm happy to talk about the madness.
Yeah, it's a huge pleasure having you on Wall Street Silver. You said in a recent video that raising rates is completely and totally ineffective and it was never actually meant to work. Can you explain that to our audience?
Sure. And I urge people to check my videos. When this was first announced, I mean, before it even actually started, I said to everyone, it's not going to work. It's not even meant to work. Look, what are they trying to do? Let's put this together real quick so it's simple to understand. We already have an economy globally that is cratering. All right.
Right.
So we have here a situation where central banks are going to be raising rates into an economy that's already cratering. So what's this meant to do? When any central bank starts to raise rates, generally they do this when an economy is running too hot. What they're trying to do is slow down the economy. Okay, so here we have central banks. I'm laughing. I can't. It gets me triggered. I can't take it sometimes. Central banks here, raising rates, saying, "Oh, they're going to continue to do it." Okay, lovely. But what's the effect of it? Number one, it's not meant to stop inflation. What it's meant to do is kill demand. Period. I mean, just look it up. Anyone can, economics 101. What is this meant to do? It's meant to kill demand. Therefore, slow the economy. But again, in a hot economy that's really running strong, okay, maybe you want to do something like that. But in this kind of scenario, it's very simple to see where this is going. All it's doing, yes, is we already have a free fall economy. Demand is already dropping off of a cliff here. People can't make ends meet. They're suffering. Mm-hmm. Personal debt, household debt, consumer debt off the Richter scale. They're already maxed out. And now we're going to hit them with higher rates here. And again, this is not meant to do anything. And it's not. Let's look at their record here. The Fed has been raising rates for months now. Guess what? It's still climbing.
Right.
Look, the simplest way to stop inflation, and no one's going to talk about it. Okay. I've been, talking about it on my own blog, but you're going to be the first to get this out on your blog. It's very simple. Have the Federal Reserve tell the banks to increase their reserve requirements, their capital they must keep in reserve. What would this do? It would contract the money supply. That's what that's meant to do. And that would actually bring down inflation. But no, central banks are hell-bent to continue doing what they're doing, which isn't doing a damn thing, completely ineffective here, slowing down the economy, destroying people with it. And it's not working. I mean, look, hats off to Sarah Eising yesterday, CNBC. I beat up the mainstream propaganda ministries to death, as you well know. Yeah. But honestly, Sarah had a guest over there, and she had mentioned, hey, look, the Fed's been raising rates, but it's not working. I almost fell out. I was sitting in this chair, almost fell out. And the guest was like dumbfounded. How do I answer that one? I don't know the answer to that. I mean, come on, man. It's insane. But what we're seeing now is a concerted, coordinated effort by central banks to bring the global economy to its knees. And it's working. I mean, look, this isn't a conspiracy theory. It's actually happening. Open your eyes, everybody. If you're new here, pay attention to what's going on. Yes, central banks do have tools in their toolbox that they could use. One tool, let's increase the capital requirements of the banks, and we actually could slow inflation. But no, they will not do that. Their job here is to continue to inflate the money supply. I've been telling people since time immemorial, all right, that central banks are going to inflate, and then freaking inflate some more. And that's exactly what they're doing. And they're going to use puppet governments to play the game. Okay, we need to fund this. We need to fund that. We need to do this, that, and the other thing. And what's that going to do? It's massively inflationary, but people aren't being told any of this stuff. It's crazy. You're right. The environment is so twisted. It's so upside down backwards. And it drives me crazy. But okay, whatever. That's where we're at.
Greg, even the Bank of America, they warned that there's a huge rising risk of the bond market crashing. What is the Bank of America not talking about, or what are they hiding?
Well, look, these institutions here, I think we're hearing a lot of this lately here, the IMF, the major banks here, the World Bank itself. Yes, Janet Yellen now is on board. Janet freaking Yellen, who over the past couple of weeks has been telling everyone, the financial system is just great.
Yeah,
It's
she
just
said it's
perfect.
fine. Everything's
It's
perfect.
functioning, it's working. And now all of a sudden we get a 180. Oh, there's a problem here. Who's we? Okay, that's what she said. We are concerned about issues here in the debt market, liquidity here. Okay, I think they're way behind the curve. So what's going on? I think these institutions have to, at least at this point, because it's so clear, to explain to people that we have a debt market that's a ticking time bomb. They're not going to put it like that. So that's what they're not telling people. They're going to tell people, oh, there's an issue in the debt market. It's not stable. But what they're not going to tell people is this entire thing, all of it, is priced off of action here in the debt market. The function of the global economy and financial system at its core is based on the debt market. We have a debt-based economic model at its core.
Mhm.
Without the debt market functioning, remaining stable, I mean, all of this is eventually going to come down. I mean, look, the writing has been on the wall for a long time. We're seeing the effects of it, skyrocketing inflation here.
Right.
We are in the early phases of it. Now, we had the Bank of England step in. Now they're saying that they're going to step out from their, QE2 was QE1 that was supposed to last for a couple of weeks. Then they did another, they doubled it. And now they're backing out. Let's see how that plays out. Let's see how fast they jump back in here, because bonds are already selling off today. And here in the United States, we're back over the 10-year yield is back over 4%. Dollar, again, knee-jerk high here. This phenomenon of the dollar is a big tell to me. It's a big warning sign. And I started telling people about this like over a year ago. I said, watch what's going to happen to the relative strength of the dollar, comparing it to other currencies. You're going to see that surge higher. I think I nailed that one to the wall.
You did.
And I don't think we're done. I don't think we're done either.
You think it's going higher, Greg?
I think the relative strength of the dollar, yes, because what do we know is going on too? I always love to say, what do we know? Because by not speculating and focusing on what we actually know, we can come up with the most likely scenarios here. So we have central banks who are killing their currencies by design. It's a race to the bottom here. Okay. The dollar will remain, in my view, the prettiest belle at the ball. It's going to remain that way. So the relative strength of the dollar is going to remain high and probably go higher relative to other currencies. Meanwhile, its absolute strength based upon purchasing power is going to dissolve. It's going to continue to dissolve as central banks continue to inflate, with puppet governments calling to fund this, that, and the other thing. The mechanism here it's a perfect storm to create more inflation. That's what it's designed to do. This is what banks or anyone is not going to tell people, that the system is designed to, and it must inflate. Otherwise, it implodes on itself, which is eventually going to happen. And then, of course, they're going to issue in a new system. That's really the backbone here. That's what banks are not telling people. No one's going to tell anybody that, but that is the bottom line. That's where we're going.
Do you think that's the ultimate end game? CBDCs, are they just going to link it to a social credit score? What do you think?
Yes, it's going to be, there's no doubt about it. In my view, we're going to end up with some kind of a central bank digital currency. They already have it. They're just waiting to roll it out, and they need a big enough outcry. And that's what we're leading towards here. A meltdown of the financial system based on an implosion here in the debt market. I've been screaming about the debt market, from a decade ago. And I don't think anyone else focused on that as much as I have. And people don't get it. They don't realize that everything is a derivative of the debt market. And the system is dependent on it in every way, shape, or form. So they're going to implode it. That's what they're leading towards, an implosion here, and then introduce a new system. But you see, the outcry has to be extreme, because people are not going to want to adopt it. So they need a few things to happen. They need to create more people dependent on the current system, dependent on the government, which is actually the central banks. The Federal Reserve is the government. They're the one that dictate the rules. They run the financial system. They run the economy. So they run everything. Central banks collectively. So with that said, they need to get more people dependent on the system, as many as they possibly can, for when they actually allow the implosion to occur in the debt market. Now, look, they're walking a fine line here. These gyrations in global bond yields is a big tell. And this is why banks like Bank of America and other banks too, and other institutions, IMF, World Bank, billionaire investors coming out here, hedge funds warning, hey, there's a problem. Yeah, there is a problem. and it's about time, seriously, that it's getting some coverage. I mean, look, I sit there and I'm flipping through the financial channels like I do every day. And when they start talking about this stuff, I go, wow. I mean, at least
Finally.
it's getting some coverage. But the issue is people don't understand it anyway.
Right.
People don't understand at all how financial systems work. If you would have asked the average guy or the average girl what a debt-based economic model is,
no idea.
They have no idea. They don't realize that that's what we have. Every nation on earth, developed nation on earth, has the debt-based economic model in place here, which demands that debt be borrowed into existence in perpetuity. Can't stop. They must inflate in order to keep the system going. Henceforth, why this act, this policy, this plan, funding wars, expanding wars, whatever it might be. They can't tell people the truth. If people were to understand that, hey, this is why we can't have a budget, this is why we have to have stopgap measures here, then they maybe would understand. But it's completely void from the mainstream channels. They can't talk about it, nor will they. And most of them probably don't understand it. I mean, you got the mainstream commentators. You think they understand what we understand? Not even close. They have the slightest clue. They sit there and they read, what does the script say today? Oh, okay, let's say this, and they get their nice fat paycheck for it. But there's no truth involved. Very, very little. But again, Sarah Eisen did yesterday, and I won't forget that. I'm not going to pick on her. I pick on everybody, as you know. I have nicknames for everybody.
That's right.
But not her, because she that really was like an oh wow moment for me.
Right.
Hey, hold on a minute. She gets it. They probably said, Sarah, in her little earpiece, shut the F up.
You see the director in the back.
He's like,
now, as we're recording this, it's October 14th, Greg. The U.S. Treasury, they came out today and they asked major banks if it should buy back U.S. government bonds. Yeah. What is it? That's October 14th.
Is that the question they're asking now?
Yeah.
Oh, come on, man. What do you think the answer is going to be to that? Duh. I mean, do we even need to discuss that?
Right.
I mean, look, without direct and immediate intervention here in the debt market, this is going to come apart very, very fast. That little blink we had from the Bank of England, now they're going to reverse that. Let's see how long that lasts. Because look, that's their excuse was, let's see how they played this out. It was kind of funny. All right, everyone, we're going to introduce quantitative easing, but don't call it quantitative easing for a couple of weeks here because we got to stabilize, the debt market here. Oh, then all of a sudden, hold on a minute. We're not going to stop. We're going to double it. But now they're going to stop because it was an emergency, but the emergency has been, it's over with. There's no more emergency. How about the emergency is a lot worse now. You see, look, you can't buy your way out of this here. What they've created here collectively, central banks. I mean, look, this is no accident. They've known this for many, many years. People like you and I have known this for many years. You can't buy yourself out of inflation like the Inflation Reduction Act. Let's spend X amount of billion and it's going to lower inflation. And central banks can't buy debt out of the issue either because the problem becomes an inflationary free fall. Again, look, there's always a price to pay. You can't have your cake and eat it too. So central banks here, of course, continuing to buy debt, creating cash out of thin air is massively inflationary, but they can't tell people that. And the other thing that people don't understand at its core is, like, for example, let's say central bank XYZ. Let's pretend it's not even the Federal Reserve.
Right.
Wants to keep interest rates at a certain level. How do they do it? Do they just say, we're going to keep rates low. Rates are going to stay low, everybody. They can't just say it. They're not magical. They have to get into the market and make it happen. They have to get epic sums of cash and buy the debt to keep rates suppressed. People have no idea. I mean, again, these are just basic things, how the financial system works that people don't have the slightest clue about because no one tells them. You're not going to learn this stuff unless you dig for it and you understand how the system works at its core. Very few people, I think, really on the planet understand the financial system, really how it works. it's just a crazy situation. Most people see what they do is they think it's beyond their ability to really understand. And that's not actually true. It's not really hard. It's all cause and effect. The whole most things in life are cause and effect. But the financial system itself is, I think, really very basic. It's okay, central banks are going to do this. This is going to be the effect of it. And all they really do is manipulate debt here. They move it around. They kind of play with it. Like, for example, this overnight repo thing that they have going on. But what's that all about? They're faking liquidity in the market. These banks are passing trillions of dollars back and forth overnight. And the real reason for that is, again, it's this debt market liquidity problem. They're trying to trick the market into thinking it's more liquid than it is by passing vast amounts of cash back and forth, which is just digits on a screen anyway. It tricks the system to thinking it's more liquid. So you can expect the Federal Reserve overnight repo program to get even bigger.
Wow.
You remember how that was sold to people? Oh, this is going to be, it's a temporary facility. I love how they call it a facility, like somewhere you're going to go and take a leak. Oh, we're going to create a facility here. Make sure you flush the toilet. And that facility is just going to be temporary. Then we're going to take it down.
Crazy.
No. There's no such thing in this environment of anything being temporary. And I'm really, really, really curious about what's going to happen here with the Bank of England, because they're supposed to stop today.
Right.
With their advanced quantitative easing, but don't call it that.
Yeah, they were warned, right? They had 3 days to get it done, and Friday, October 14th was the last day. Do you think they can't just keep saving it, like what you were saying earlier? There's a blow up. They try to intervene. Now there's another blow up. Is there just going to be a point in the next month or 2 months where it blows up and they can't intervene at all, Greg?
Well, look, I mean, it's controlled. In other words, they're going to let this thing come down when they choose to. This isn't going to be a surprise. Look, we have clues. The clues are everywhere. We're already seeing it unfold. We're watching global bond yields rise, which means what? Bonds are selling off. You have this knee-jerk higher in the dollar, which seems to be is getting pretty profound. And even today, we have the same issue. Did you see what happened earlier? We had the market was green, then all of a sudden bonds started a 10-year yield rising, dollar got stronger, stocks started dropping, and they're down pretty substantial right now. It's again cause and effect here. You see what's going on, and I think they're going to continue to try to manage this until they say, okay, look, it's becoming to the point where it can't be managed anymore. All right, now we're going to pull the plug. So, but I think at least I would hope that people who have their eyes open, who follow our work, have been prepared enough for it. And I just don't mean from a financial standpoint. I mean, mentally, spiritually, physically, they're making alliances with people that can count on it for a worst case scenario. You always have to be ready for a worst case scenario, have the high ground. And in the event that it doesn't happen, okay, you're still ready. But it's just so important in this environment to understand what's going on, realize how it's going to play out here. And it's very simple. Meltdown in the debt market. This is something I've never wavered from ever for over a decade. A meltdown in the debt market, uncontrolled spike in yields like we're seeing here, although they're trying to control it for now, massive amount of pressure on the stock market. Both will sell off simultaneously. Cash doesn't grow wings and fly away to money heaven, okay? It's just going to move into commodities, and commodities are going to skyrocket. That's how I see it playing out. I can't imagine another way unless someone tells me another way that I find logical, but that just seems logical to me.
Right. Well, Greg, we genuinely appreciate you coming down and speaking to everyone on Wall Street Silver. Any last words for everyone watching?
Look, I've been telling people forever, all this is well and good. It's important and it's fun to follow. But remember what our greatest resource is. Our greatest resource is each other. And if we can count on each other and find people that we can count on during this whole thing, well, we're going to come out okay. But that's the backbone of it. And obviously, hedging your bets too, getting on the right side of this.
Exactly. Well, thank you so much, Greg, and we hope to see you soon.
Absolutely. Thank you.